Opportunity. That's our topic for today's Backstage Pass. Hey friends, happy Friday. I hope you had a wonderful week so far this week. Here in the afternoon session on this wonderful Friday, well, stocks are up after being mixed all day long. They're finally into positive territory. Mortgage bonds are down. Mortgage bonds are down about 20 basis points here at the time of recording. The 10-year yield is up about 4 basis points at the time of recording. And, mortgage bonds have been trying to hit and go over a statistical ceiling of resistance here all week long. The good news, the saving grace, is that the 10-year yield, it's been hitting a statistical ceiling of resistance as well. And so just kind of keeping everything in this sideways, pretty narrow band all week long. Now, translate that over to mortgage rates, and mortgage rates, the national average for 30-year fixed rate mortgage came in again yesterday at 6.65%. That's where we're seeing it end this week. And it's been there basically just kind of hovering right at that 6.65% line all week long. So while mortgage bonds have been kind of hovering that line and the 10-year yield's been hovering that line, well, mortgage rates have been pretty stable all week. But look, here's the deal. Last week to this week, according to Yahoo Finance, that's the largest drop in mortgage rates in a week-over-week period in the last 41 years. A huge drop in mortgage rates, relatively speaking, and so good news this week for mortgage rates. Now, we'll talk more about that in just a minute and how that's affecting housing. But first, let's talk about the existing home sales report that we got today from the National Association of Realtors. Let's jump into that data real quick. Now, existing home sales it's a measure of closings on existing homes, and they were down in this last report by 5.9%. On a year-over-year basis, sales are down about 28%. Now, inventory has crested, as it does every time this year, after the normal seasonal build, and it's starting to decline. And it's declined for the third straight month in a row now. Inventory's down to 1.22 million units. However, that number does include homes for sale that are already under contract. So if you look at active listings, there's only about 754,000 active listings. And that means that 38% of the quote-unquote inventory in the existing home sales report, well, it's under contract and it's not truly available. This really speaks to the amount of demand that's still in the market. Homes remained on the market on average for about 21 days. That's up from 19 days from the previous report. 64% of homes were on the market for less than 30 days. Now, first-time home buyers accounted for 28% of sales. And just a quick note, that's the same level as it was this time last year. So even though overall volume is down, the proportions are still about the same. First-time home buyers, about 28% of all transactions. Cash buyers accounted for 26% of sales. That's up from 22% and in the previous report. And investors purchased around 16% of homes. That's also up as well. Foreclosures and short sales, well, that accounted for less than 1% of all transactions. Now, right now, there's a record low amount of inventory that's for sale on the market. And we do know, activity is a little bit slower right now. We know that many buyers have been sidelined by these higher interest rates, but this is what we believe is going to happen. We believe interest rates moving into Q1 2023 are going to continue to come down. And a lot of those buyers that have been sidelined by these higher interest rates, they're going to rush into the market. They're going to flood into the market and try to buy. But they're going to be coming into a low inventory environment. So what happens whenever you have limited supply that stays steady and you have increasing demand? Well, you have prices that go up. And so we believe that the current environment right now is going to continue to support home values right now and continue to cause home values to go up. It's just simple supply and demand economics. So here's the opportunity right now that you have. If you're thinking about buying a house right now, but you're thinking maybe I should wait, prices are going to come down next year, maybe prices come down. Look, now is the time to buy. All indicators are showing that home values are going to continue to rise. Right now is the time to buy. You don't want to get into 2023 and kick yourself for missing that opportunity on that one piece of property or that one house or whatever it is because you've waited to buy. Sometimes it's hard to see the opportunity that's in front of you until it's already too late. So that's the opportunity that we see in housing right now. Now, that's all the news that we have for today and for this week. Listen, we appreciate you. Thank you so much for watching these videos. If you have any questions, please feel free to leave a comment, ask a question. Don't forget to like and subscribe right over here. And listen, whatever you do, stay positive. Have a great weekend, and we'll see you on Monday.